Thanks for tuning into India Market Close. And the markets yet again are doing very well. So yet again a new high, very close to 24,000, not quite there yet. Maybe a day or two left. Remember, tomorrow is the monthly expiry, so don't know if some fun and games happen around that. But it's a good, strong, solid showing. Yet again, banks have not disappointed in some sense because they are participating almost in line with what the benchmarks are doing. The difference between yesterday and today, though, and I want to bring up the mid cap and the small cap indices as well as the market breadth. And bring up the small cap index as well for just a brief bit. The difference is that yesterday, while the small caps were in the red, the mid caps were participating. Today, the mid cap index too is trading absolutely flat, and the market breadth will come up on your screen next for just a moment before we get to the heat map on the screen, and you will see that it was bobbing between the red and the green, but the quantum of reds and a number of times in the day has actually been more. So even Stevens with maybe some more red than green. Let's pull up the heat map and show you what's happening on the index at least, and brokerage note led reactions being seen today. Apollo Hospitals, that Macquarie note, circumspect on hospitals. Tata Steel and Hindalco, multiple notes circumspect on what the fortunes of some of the metal companies could be. And autos continue to pull back after hitting some fairly lofty highs for the last 4 years. And auto stocks are pulling back. A number of times now we've seen M&M, Hero, Bajaj Auto being amongst the top losers. What's done well? Bharti Airtel yet again, Reliance yet again. Is this a sign of an impending price hike coming in? That's the question that the street is whispering, really. Ultratech has had a good day and banks continue to participate. But you have to admit, Tamanna, that in some sense, as a pocket, Telecom continues to be a rank out performer. It happened in Friday last week. It's happening today yet again.
And I reckon the reason that you're mentioning is the one to watch out for now that the spectrum auctions are out of the way. Are those long-awaited tariff hikes going to come? Look at a Vodafone today, and that's one of the stocks that we're tracking this afternoon. Let's pull up what's happening in the broader markets as well, and whether that sort of enthusiasm which we're seeing on the Nifty continues. Not quite in the red, flat, but in the red on the Nifty mid-cap, small cap also just marginally in the green. So remember the action in the Nifty 50, quite like what we saw yesterday where there were a few stocks pulling up the market, and that's what's happening today as well. Exciting that we are comfortably over 23,800. But let's get to the specifics. India Cements. I have to talk about India Cements. Across the board, the cement counters buzzing in trade, but India Cements more so than any other. No specific news that is in the public domain as of now, but yeah, 15% up in trade as we speak. Zee Entertainment is another one. They're raising funds up to 200 crores is what they're planning to do, but 5% up on the counter. Now, a lot has been happening in the Zee stock recently. Puneet Goenka has invested in Maverick Productions, but in his individual capacity, they have yesterday sort of severed their last ties to the whole Sony business, with NCLT approving their bid to actually stop that claim. So are they moving on, and now they're raising funds. 5% up on Zee. Telcos in action. I'm just going to revisit that, though. You know, Niraj did speak about it. Vodafone, Indus, RIL, Bharti. Just look at all of them. Vodafone is quite an interesting take. They have a tie-up with Samsung, and that could be part of it as well. We'll get you details on that in just a bit. But nearly 7% up on a Vodafone. Let's see what's happening with Indus and RIL, of course, reflecting the Jio action. CE Info Systems. The promoter is selling stake. Street not taking too kindly to it because of the sequence of events, and this is something that we were talking about in the opening trade as well, that you have a very positive note, stock runs up, promoter sells some stake, very little stake, not too much, but maybe that's one of the reasons why you're seeing some pressure there, 5.5% down. Raymond is seeing a lot of action. Now, there is a board meeting tomorrow, an important board meeting tomorrow, because it also will see the board decide on the reappointment of Gautam Singhania. Backdrop, IIAS and Investor Forum had a note out saying that Gautam Singhania should not be reappointed because of all the trouble facing his impending and possible divorce. The stock has been rallying ever since. The way the company is diversifying is something that perhaps investors are liking. 6% and more up on the stock. Inox Green, another fundraise. 1,050 crores is what they want to raise via preferential issue. The board has come in it in on it. Not too much action right now on the stock, but remember, this is one counter that has been rallying up. So these are some of the pockets. I didn't quite mention defense, but Niraj, that continues strong as well. Mazgaon Docks because of Navratna Stratus, Garden Reach, Bharat Dynamic, BEL, that whole lot has popped up today in trade once again, isn't it?
Just when you think that they've done their bit, they suddenly come back and do really well. So interesting to see how that entire space. In fact, you know what? Actually, before we talk about the market, let's talk about that for a bit with Ruchit Jain, CMT lead research analyst at 5 Paisa, joining on the charts, and Vijay Chopra, MD and CEO of Enoch Ventures, on the fundamentals. Gentlemen, both of you, thanks for joining in. Ruchit, before we talk about the markets, a quick word. A bit of back after a brief interval, if you will, for defense names. Big move today. Can this be a start of a multi-day up move?
Yeah, hi, very good afternoon. I think yes, quite possible, because we have seen that the price up moves which are seen in many of those stocks recently have seen a good volume pickups again, especially the shipbuilding names such as GRSE is there, or Mazgaon Dock is there, Bharat Dynamics is there. So I think probably it clearly shows that when the volumes are good, even if the price up move, the broader trend remains intact. So it's quite likely that the outperformance of the price uptrend that we have recently witnessed could continue going further until we see any kinds of reversals. Even in the recent corrections during the elections time, some of the stocks have not reached even the 20 days exponential moving average, which are very short-term supports. So for now, there are no signs of reversal, and hence the trend could continue on the higher side.
Okay. Now, what about specific market moves? I mean, today, Bank Nifty 0.5%, Ruchit. If you were long, would you stay long ahead of the expiry, or would you book profits here?
Well, it's better to stay long, because what we have seen in last couple of trading sessions, although the broader markets have seen some profit booking in the mid cap and the small cap names, but the large cap stocks are witnessing good buying interest. Especially ones from the banking, private sector banks, or you see telecom space today. So even there have been good risk reward ratio in some of the IT names. So I think if banking takes a backseat, then it may be the IT which would take the leadership. So the kind of sector rotations that we have seen off late, the sector rotations are happening in index heavyweights. So when the heavyweights are witnessing good buying momentum, so I think that's the time where if you are long on the index, I think better to continue to ride the trend. So no signs of reversals for now. 23,900, 24,000. I think this is the one range where no initial resistances are there according to retracements. But looking at the buying momentum in the heavyweights, I think it's better if you are long on the index, then continue to ride the trend. But yes, in case if you are holding some of the mid cap and the small caps names, then you can prefer to start booking profits over there.
What are those mid cap and small cap names where you would book profits, Ruchit? Very good afternoon, Tamanna here. And also, let's get your top picks for this afternoon.
Yeah, hi, very good afternoon, Tamanna. I think that kind of the consolidation that we have seen in the Nifty Midcap Index in last 4 or 5 trading sessions, although this seems to be more of a time-wise correction, but the stocks which have seen a very significant run-up post that election results, that's where we are witnessing the overbought momentum setups. So because of that overbought setups, there could be some pullback moves in such names. And you look at the stocks which are showing buying interest in last 3 or 4 trading sessions, private sector banks, some of the IT names, Telecom, these stocks have not rallied significantly in last few months. So the risk reward ratio is much favorable over there. So I think that's where one should be very selective in the stocks picking if one is looking for fresh entry. I have a couple of buying recommendations. Again, both the large cap names. One would be Bharti Airtel, which certainly has been rallying higher with good volumes. Previous highs has been taken out. With stock below 1420, one can buy for potential targets of 1550. And Sun Pharma within the large cap pharma name looks good. The stock has went through some corrective phase in last 3 or 4 months. Now, although the stock is not near its previous high, but the stock is now consolidating around its support area. So the risk reward ratio, again, as I said, some stocks or some sectors which have not rallied, the risk reward ratio is much favorable over there. So Sun Pharma, I think if one has to take any contra trade, then this is a good level to go long on. Traders can keep stock below 1460 for potential targets around 1600.
Yeah, let me ask you about one of the picks that Ruchit has. A very good afternoon to you too. I have to start by talking about Telecom. I mean, do you think that there's just too much of an optimism on tariff hikes right now? And that's what we're seeing playing out, because nothing stupendous coming out from the Spectrum auctions, frankly. I mean, undervalued as in underbid, demand much less than supply of Spectrum. So why is this being seen as a spurt for the telecom players?
Well, Tamanna, we are in an era where positive news actually at times propels. But yes, I completely agree that fundamentally nothing much has changed in the sector. If you ask me about the telecom play, I think this question was asked a couple of weeks back as well. My first choice would be Jio, and we are seeing Reliance actually running up, and maybe this is one of the Jio could be one of the reasons why because it is still an entity which is owned by Reliance, and maybe it is going to be demerged later. But yes, telecom is a very difficult business. It's not easy because it's very capital intensive, and ARPUs. India has some of the lowest ARPUs in the world. So yes, if at all there is a revision happening, it is for good for the balance sheets of all the telecom players. And people keep on asking me, what about Vodafone? Why don't you recommend that? I think that until unless I see a balance in the debt and the revenues, because the debt is anyway surpassing the revenues. So until unless I see any parity in that, I won't be recommending Vodafone at all. So again, I don't think you should jump and buy right now. People who have, they should keep on booking profits, whether it's Bharti and Reliance. Of course, it's a long-term portfolio stock, so I won't recommend a sell in Reliance as of now. But I do think that Bharti and Vodafone, people can book profits because Vodafone has been moving up since almost 12-13 rupees. So maybe a rupee or so more. But again, why to take that risk when there are options available in the market? There are companies which have not moved much. They were quality balance sheets. So why not go and buy those companies?
Vijay, we're just talking about Vodafone. And you were saying that how you're hesitant to give a buy call on Vodafone. People have been hesitant since that stock was at 11 rupees. And the hesitation continues. Fundamentally, I understand what you're saying. No doubt over there. But it's at 18 today and no stopping it. Just quick word from Ruchit on Vodafone on the charts.
Tamanna, let me just give you a disclaimer of first over here that I too hold these Vodafone shares in my personal account, and I had applied for that FPO which recently came around 11 rupees, and I have been allotted in that. So technically the short-term trend remains positive. The only thing is that it is now approaching its previous swing high resistances, which is around 18.5. Previously in the month of February also 18.5 acted as a resistance. So if that level gets crossed, then I think that would again open up the stock for a further up move towards 21 rupees. So very crucial would be 18.5. Whether the stock gives a closing above that. If it gives, then possible for a pullback move towards 2100 cannot be ruled out.
Yeah, and both sides might be right. Difficult to maybe do this, but at 12 rupees or thereabouts, and that whole fundraise that happened, there's some marquee names that put in money, including GQG, and that stock has done really well for itself. But like we discussed at the start of the show, while telecom might be, defense is the name of the game. Really, from Mazgon Dock to Bharat Dynamics and Garden Reach, all stocks are gaining in trade. Anushi first jumps in with some perspective here. Anushi, what are you gathering?
Well, as you clearly stated, that defense is the game today that we are looking at. Strong movers on this side. We have, just look at us what Garden Reach is doing. The stock is about 9% up. Mascow has clocked in returns about 7% of an intraday high. Even Bharat Dynamics doing well after its investor presentation come out. But I'll specifically focus onto Mascow Dock. Now, this has been the stock of the day. Granted that they have received the Navratna status from the Department of Public Enterprises. So now with this, what does this exactly mean for the company? Now company can undertake investments up to 1,000 crore without government's approval. In fact, they can also undertake investments up to 30% of their total net worth in a year, given that this does not exceed the 1,000 crore mark. Also, they now have the freedom to enter into joint ventures, form alliances and float subsidiaries abroad. So this is what it means now to become a part of the Navratna company. Other companies which already have this kind of a status include the likes of Bharat Electronics, Container Corporation of India, Engineers India, and the recent addition being IRDA. Coming to Mascow, the company is not just today it's seeing this kind of an up move, but the last 6 months it's been on a tear. 80% of a return. Company's order book stood at about 38,000 crore as of March 24, of which 82% of the order book is from its shipbuilding segment. Now moving on to the other player which is in focus today is Bharat Dynamics. Now this is after its investor presentation came out, wherein they have come out with more details on how the company's order pipeline looks forward and how the order book stood. So the total order book stood at about 19,434 crore at the end of FY24, while they received new orders worth up to 1,793 crore. Now, going forward, the order pipeline that we can look for the next 2-3 years remains in the range of 20,000 crore. So that definitely remains in watch out. And as to what kind of orders they've executed in this year, it includes heavyweight torpedo orders, export contract of lightweight torpedoes, along with some Akash, which is the Indian Air Force orders again. But to give a basic recap on how the company fared in the FY24 period, while revenue remained muted, in fact, it was down about 4.8% at rupees 2,369 crore. It was the EBITDA and the PAT margins which bucked up the company, with EBITDA margins moving from 16% to 22% in the FY24 period. So this is all that we are looking at, not just it's Masgao, Bharat Dynamics, Garden Reach. All these companies are back in traction again in the defense space after we saw some correction in the earlier week. That's what we are looking forward in the defense pack in general.
Absolutely. So back in action on the defense. I just want to see what the Nifty PSE is doing before we take a very quick break and see if there's a larger theme there with all your government-facing stocks rebounding. Not really. The Nifty PSE in the red on a day when otherwise, at least your frontline indices are doing phenomenally well. Look at the Bank Nifty, about 324 points up right now. All-time highs, obviously, as we started and moving up further on those on the Nifty and the Sensex as well. But the broader markets are not really looking that exciting. Is there an opportunity for catch-up there? That's what we're going to talk about after this very, very short break. Stay tuned. pull up the top losers and gainers on the S&P 500, on the BSE 500 to see what's really not working. Because while all over you have a very positive trend on the Nifty and the Sensex, Bank Nifty doing well, broader markets are actually in pain. You're seeing Macrotech down second day in a row, NMDC on the back of not very positive notes. CE Info Systems, after the promoter has sold a stake. Now remember, this follows a huge run up in the stock. I want to come to Vijay Chopra on MapMy India or CE Info Systems. And when there is a stake sale, you would see some kind of a downside, but do you think it's being overdone? How are you reading this?
Am I audible?
Yes, you are.
Yeah. So I think that there are certain stocks where we are seeing that some kind of a euphoria is existing, and I think that once these stocks open gap up and they still go up another 400, 500 rupees, I think that's the time to sell. Whenever there's a gap up, in technical parlance, we need to be out of that stock because the gaps would be filled. Now, I think stocks like MapMy India, even if the promoters have moved out, the stock went up. But again, do not get caught up in the euphoria. Whether it's defense, it's a fantastic sector, but do not get caught up in the euphoria, because you never know when the stocks take U-turn or market takes a U-turn. Even in MapMy India, I think that people who are sitting on profit, they should exit. Nothing much has happened fundamentally. We still all use Google Maps. Wherever I think it must be installed in all our phones. I don't think I use the MapMy India app. Never ever use that. So for sure, one should exit MapMy India. I've never recommended this stock ever, but yes, I think looking at the charts, it should be exited.
But so MapMy India is not quite seeing a great day, but some of the others which had that brokerage note. So, this morning we spoke to Crystal Integrated. That stock is now in the green at 862 after the management has guided to nearly a 100% growth over 2 years in PAT. And this is after Crystal Integrated has had 1 or 2 very good days. Similarly for a TBO Tech, very strong moves. And in today's session, some of the others as well have had a really good move. The likes of the 2 brokerage notes which came out. One was Investec on Shivalik Biometals or JM Financial
on Shivalik and Stylam. Investec on Stylam.
The name was missing me.
So Investec on Stylam was very, very positive. Let's pull up that and 10% up on the laminate making company, saying that their outlook is looking extremely positive. So Stylam's doing great. Shivalik will pull up once more. JM Financial has a buy call on that as well. So both doing fantastic. In fact, Ruchit, keen to know if you track any of these 2 counters?
No, technically I have not seen any of these.
Okay. Vijay, are you looking at any of these 2 companies in focus this afternoon? You're on mute, Vijay.
Yeah, Stylam I've looked at, but again, I think it should be exited. I would prefer a Green Lamb, which is a much bigger, better company. I think that, the industry outlook is good. If Stylam is feeling that, the sales numbers should be good and the offtake should be good, I think Green Lamb should also be benefited. It's also one of the companies in laminates and presently consolidating around 600. I think that this stock also has the potential of going up to 670, 680.
By the way, Harsh will come in and talk about some of these stocks as well and the rationale thereof. But, we started off talking about CE Info System and a block deal there. Here's one more stock on which there's a block deal. But Hindustan Foods, we should pull that stock up because there is a sharp rally out there after a 600 crore block deal in early trade. Mahima has more details here. Mahima, tell us about the block. Tell us a bit about Hindustan Foods as well.
Right, Niraj, so the block did happen in pre-market today and around 11% of equity changed hands, which is almost 11 lakh shares, and the price at which this block trade took place was 502 rupees. Now, in terms of how the company has performed in FY24, well, the revenues grew by 6%. In terms of their EBITDA grew around 29% for FY24 and PAT grew by around 31%. But, talking about the block deal, well, we don't know the buyers and sellers yet, but in terms of the major shareholders, where promoters like Vanity Case India holds around 40.5% equity, Asha Ramanlal and Sameer Ramanlal hold around 10.54% stake in the company respectively. In terms of public shareholders, where Jalamukhi Investments holds around 5.7% and Infinity Consumer holds around 4%. Now, in terms of key highlights for FY24 for the company, well, input material did affect the company a bit, which is why revenue was up only 6%. However, the volumes were maintained, and in terms of debt to equity, it stood at around 1.06 times, and ROE stood at around 18.2%. In terms of future growth, well, the company is investing in capex. They've done around 150 crores of capex in ice cream and soap manufacturing, and they are taking up various integrated plants and plants like plants in Nasik, and also ShoeTech acquisition is expected to stabilize in Q2 FY25. Now, in terms of the entire sector outlook, well, FMCG has been facing some kind of demand constraints. However, price deflation, of course, price deflation is also impacting the business. However, diversification in new products and geographies is something that is working for Hindustan Foods. Overall, if we talk about the stock performance has been remained muted in the past 1 year for the stock, except for today. 1 month it was up around, it's been up around 14%. However, 6 months and 1 year it was up only around 3 and 5% respectively. So, of course, the block deal is the reason why the stock is up and above in trade today, and factors like this are working for the company.
Yeah, all right. Thank you for that, Mahima. So, Hindustan Food serving it hot because of the block deal. But another company which has really seen a runaway, now 7% up, is Raymond. And I'm curious about Raymond. I want to ask Vijay about his views on it. Now, this is interesting because the board meeting tomorrow will see a vote on the reappointment of Gautam Singhania. There have been concerns because of the private situation in his family and whether his estranged wife will make a claim, etc., etc. Meanwhile, a note out about a week ago, very, very positive on Raymond. Just wondering how you look at it and the events of tomorrow, how you expect it to play out from a short-term perspective.
Tamanna, I don't think anything is short-term in markets. Yes, you might see some movement here or there. But I think that, whatever is happening in the Singhania family is not good. First the father, then the wife. And, the wife is also, trying to consult the legal counsel, and she might come up with something which is not for the image of the company, because over a period of time, image matters. There are companies who have been, tarnished by the, by the onslaught. Paytm is an example. The image slowly and steadily was getting tarnished. So I would say that whoever are having Raymond, they want to book profits, they can. But I don't think that, somebody could go and buy right now. It's a good company. The product is good. The distribution channel is fantastic. It's a company which has, actually able to penetrate into the nooks and crannies of the country. It's not easy. And it's a very old brand and a trusted brand. And they have, delivered product-wise over the period of years. But again, I think that, let this dust settle down. We really don't know what will happen in the family feud. But yes, as far as the stock is concerned, and as I see, it has moved quite a bit. One should book profits and look for other opportunities there. As I said earlier, and if you suggest, I can give you a few names as well, which I think can move up. The stocks which haven't moved much. So Raymond has gone up almost 500 rupees in the last few days. So I think that it's time to book profits.
And Vijay, we'll talk about some of those names for sure, but just wanted to get a view from Ruchit on both Raymond as well as Hindustan Foods, because both of them have done so well. So Vijay will come to the stock ideas as well. But Ruchit, firstly, Raymond, very excited, and Hindustan Foods too. Off the highs of the day, but still higher.
So I'll come on to the Raymond first. So the product trend, there's no doubt, still remains positive because technically there's a high top, high bottom structure. And good thing is that last 3 or 4 trading sessions, when the stock has moved from 2,400 to almost 3,000 now, the volumes have been very high. So yes, the stock has rallied, but still even at current levels, if the volumes are high, then I think the trend could continue. definitely the risk reward ratio, the stop losses for fresh longs are quite far from what current market prices are because of this rally. So I won't advise buying fresh into the stock at current levels until we get any kind of minor dips towards the support. But existing long positions can be held on with a revised stop loss method. Now for Hindustan Foods, many times we see that because of some news flows or such block deals, we do see 1 days of up move or down move. But what happens on the follow-up day is very important. So I think although we have seen that the stock has seen a good gap up opening today, but I think the follow-up move would be important. And if I look at some of the historical data, then around 570, 580, there have been resistances in the past as well. Just recently in the month of November last year, the stock faced resistance around that 580 mark, and from that corrected around 470. Today's high also is around that 582 mark. So clearly the resistance is there around 580. So I won't take any conclusion from just 1 days of move that the stock would see any kind of uptrend. But I think better to wait for some follow-up buying also.
Okay, we'll take a very quick break. That's the view on Hindustan Foods and on Raymond. But we are coming back with a look at the derivatives market and, of course, BTST call. Stay tuned.
Okay, as we addressed before, Stylam is up in trade after Investec initiated coverage, seeing a 41% upside. Harsh is here to tell us more about this. Actually, it's up over 10%, but off the highs of the day. Harsh, what is it that Investec sees in Stylam?
Well, first off, for background, it's into decorative laminates. The company is into decorative laminates. Has been a fantastic compounder in terms of profitability. Great 20-year track record just in terms of the way profits have evolved in a very tough industry otherwise. And it's got a 30% CAGR record over the last 20 years from 2004 to 2024 in profit after tax compounding. So in any case, a very strong contender for the way in which history seems to be playing out for it. Now, just in terms of specifics, one, Stylam's per unit revenue has lagged peers. Though it fares better where operating metrics are concerned. So That's where it really stands out versus peers. The company has funded its growth capex also completely through internal accruals. They've deleveraged themselves as well, so therefore leaves a good window of positivity on the balance sheet as well, along with the very healthy PAT compounding that it has done over the years. The return ratios continue to remain quite healthy. With the correct execution, there could be in fact upside risks is what Investec seems to cite. And there is also the potential of a strategic investment by a multinational company which could aid the re-rating going forward. They're expecting EBITDA and PAT compounding to continue over the FY 24 to 26 period, around a 20% kind of compounding expected on the EBITDA number, and they're valuing it at 2,362, which is 25 times FY 26 price to earnings.
All right, so Stylam we spoke about, it's doing well today in trade. Vijay Chopra thinks that others are better alternatives like Greenlam. But let's turn our attention to what's happening on the F&O side of things. Bank Nifty at monthly expiry today. Agam went off smoothly?
Rather smoothly, and of course on new life highs as well. So those are the two positives. Well, after the sharp up move that we saw in the first 1 hour of trade, the Bank Nifty has remained largely where we saw at the levels that we did around that. And at the moment, of course, we are seeing the same as far as the Nifty is concerned as well. So it was a relatively quiet day, a positive day. That perhaps is the big takeaway there. And we move into the final trading session as far as this June series is concerned tomorrow. For now, rollovers have picked up for the Nifty as well, about 50%, I reckon, by the time we end this session. And for the Bank Nifty, of course, today was the monthly expiry. We're already looking at a rollover around 59%. Now, this is a tad lower than what we have been used to over the past, 4 or 5 odd months, notwithstanding the month of May expiry, because that naturally was when a lot of traders didn't really take positions on considering the 4th of June outcome. But in terms of your options market, as far as the Nifty is concerned, again a lot more put writing and unexpected lines. Your overall open interest distribution now coming into play is a 24,000 mark. Now, can the Nifty take out 24,000 tomorrow? That is a big question, because we have seen the Bank Nifty move from strength to strength, taking out a lot of crucial levels. You never know. It probably could take out or at least touch 53,000 today as well. But for now, of course, we're watching out for 24,000. There's been a lot of put writing over the last few sessions, as you can see on your screen there. That's always a positive. Let's move on and talk about the Bank Nifty. And as I was suggesting, 53,000 is now in the horizon. That's a mark that we're going to keep an eye on even as we move into the next few sessions. And if it doesn't make it today, and should we see strength in the Nifty tomorrow, there is a high chance that we could in fact see that level being taken out. Finally, coming down to stocks, again, essentially a lot of stocks from the BFSI space. So SBI Life along with ICICI Lombard looking at mixed cues, but gains for Axis Bank along with a whole list of other private sector banking counters. HUL and Bajaj Finserv, subdued cues coming in there. Among stocks which see unwinding, again, these numbers will be relatively larger naturally, because tomorrow is the monthly expiry, not just for the Nifty but also for the stocks, which is why we're seeing a little bit higher in terms of your unwinding coming through. All in all, another good day of trade, a better day for the benchmarks as compared to the broader market indices, and it's a wait and watch whether or not we do continue to see the strength moving into tomorrow.
Okay, so we're seeing the strength possibly moving into tomorrow. No really stopping the Bank Nifty right now. Ruchit, I want to come to you on the key players over here, and ICICI Bank especially. We spoke about everything else, but let me come to ICICI Bank. That Jeffries note today completely fueling the run-up in the banking space and this particular counter. Do you see a further upside?
So I think most of the private sector banks in this series, especially in the second half of the series, have seen a good long build-up in the derivative segment, be it HDFC Bank, ICICI Bank, or even Axis Bank. So the price up moves, in last couple of weeks have been supported by good rise in open interest. So whenever there are such long formations, I think there could be some good trended phases, and the stock technically has also been forming high top, high bottom structure. So quite possible we would see a continuation of uptrend, and 1250, 1260 from a short-term trading perspective. I think that's where the next retracement resistances for the stock would come. So we expect a continuation of the up move towards 1216 ICICI Bank.
Well, up and running, and one more brokerage house, of course, today, which gave that bit of a leg up to ICICI Bank. In addition to Jefferies, I think Goldman was very constructive on the private banks as well. To be fair, Vijay Chopra has been constructive on private banks thus far too, and those stocks have done really well. The question is, can they do more? Vijay, which of the private banks would you choose if you had to pick up only one large private bank for investing?
Well, I think that we have already seen a run up in HDFC Bank, but I still think that it is the largest private bank, and I think it's a good probability that people who are holding it for a long term, the bank won't disappoint. So I see probably 1800, 1850 levels coming on HDFC Bank, although it has already reached the past highs post the fall and the debacle we all saw. But I think that it still has one of the best asset qualities in the entire industry. So I would say that HDFC Bank still is one of my best picks, followed by ICICI.
Okay, so HDFC over an ICICI, says Vijay. Let's look at what else has really been moving today in trade, and just want to talk about the cement pack for a second. We talked about India Cements, but across the board, whether it's an Ultratech, whether it's a Ramco, that entire segment is really buzzing. And Vijay, I'm just wondering if you see any fundamental reason to come into the cement story right now ahead of the budget. We know that there's going to be large infra spends, real estate is booming, etc. Enough of a reason to come in? And if you do, would it be the top 2 or 3 players or the regional players? Vijay, can you hear me? That question's to you. Okay, I think he's frozen. We'll try and reconnect with him. Ruchit, your take on cements. I think India Cement you've answered. If not, please do revisit. And which of the cement companies do you like?
So today, the price volume action is quite strong in most of the cement names. But if I have to pick any of these names from the large cap space, it would be Ultratech Cement, because of the relative outperformance that the stock had shown even when the overall cement space was in a corrective phase or a consolidation phase. The 20 DMA at 10,500, 10,600 has now become a very strong support for Ultratech Cement. Until this is intact, I think we can expect some further up moves in Ultratech Cement. Whereas from the mid-cap cement space, Ramco Cement's chart structures are looking quite positive. Recently, after a positive divergence, we had seen a price up move followed by consolidation. Even the short-term supports are intact during this consolidation phase, which is around 830. So till the stock is trading above 830, I think if the cement space as a sector does well, then this stock has potential to rally towards 950. So Ramco Cement and Ultratech Cement, these are 2 stocks which could do well.
Ramco and Ultratech is the top call for Ruchit. Vijay, I think you can hear me now. Was waiting for your take on the cement space, starting with India Cements.
I think that a lot of action is happening in the cement space, and I think the kind of outlay I expect in the budget, like last time, infra would get a lion's share, and whenever infra gets a lion's share, so there's a good possibility that we are going to see an up move. So there are few companies which I look at right now in the cement space. Ramco, he has already mentioned. I think Ambuja is also one company which probably can do very well. And I see, it can cross 700 odd levels. Ambuja has done a acquisition lately, and I think that it should do well. My second pick would be ACC, another Adani company now, but again ACC is a very big brand in the cement space. So ACC and Ambuja both look good to me. There are smaller companies like Udaipur Cement, which is now a part of JK Lakshmi Group, JK Lakshmi Cement. So I think that, in a correction, one should buy Udaipur Cement because it can do, there could be a lot of value unlocking happening in this company over a period of time. And it's still valued very reasonably as compared to the brand it is into now. So there is going to be a huge action in the cement space, because I am expecting some major announcements around infrastructure.
Let's pull up the Nifty contributors. Reliance is up 4.5% now, and that is a serious point contribution on the index. I think it's being pulled back today by the likes of HDFC Bank to an extent and autos by and large. But look at that point contribution from Reliance, 99 points to the overall 221 point up move on the Nifty. With ICICI Bank and Airtel right up there, but 97, 98 points on the Nifty is pretty strong. 4.5% Reliance at record highs, so watch out for that one. Meanwhile, ITD Cementation, some news flash on your screen, gets a marine contract worth 1,082 crores for construction work at Dahej LNG terminal. And that's interesting. That stock is up about 4.5% as well. So, two stocks which have moved up about 4% apiece. Ruchit, a word on either of these?
So the broader trend, I think, looks positive, because we have seen that the recent price up move has also seen good price volume action. And even in ITD Cement, if we look at the entire move, then the 20 DM has been acting as a good support on any corrections. Secondly, the volumes during a small bit of corrections which can come in, we have not seen any kind of volume-based sell-off in the stock. So already the stock has seen a good run-up over last few months. But still, if any existing positions are there, then they should continue to ride the trend. 480 to 470 now becomes a good near-term support for ITD Cementation.
Okay. Tamanna, some stocks just want to mark. So Punjab Chemicals is still up in trade, but if you look at the intraday move of Punjab Chemicals, that stock has come off from the highs of the day. Look at that sharp pullback from midway through trade. The one which is doing well is Inox Green. And I wonder if there's some news flow that we are missing, because Inox Green had a board meet today.
They're raising funds. I mentioned it. They're raising about 1,000 crore rupees.
The amount has come in? Okay.
Yeah, about 1,050 if I'm not mistaken. Inox Green is raising, and we addressed this right in top of the show today at 2:30, where it was completely flat. But it has climbed up, as you can see, from that intraday spike in the last 15-20 minutes or so.
Richard, you track this one on the charts, therefore? Inox Green?
So chart sectors looks quite bullish even from current levels. We have seen that volumes, if you look at today's volume, then compared to last few days or few weeks, volumes are quite high. And the stock has went through a corrective phase as well in the month of April, where prices corrected from 156 to around 120, 125. So I think the trend remains quite bullish. We could see further up moves in the stock in the short term.
Okay, Inox Green looking interesting in today's trade. We look at some of the other sectors that are maybe not having such a good day, and I would pull up hospital stocks or that healthcare space. There's a Macquarie note out today, which is quite negative, and they've marked out two specific stocks as underperformers, both on your screen: Apollo Hospital and Max Health. They see growth completely faltering, profitability getting hit as well. They say the top line growth has been primarily driven by rate hikes as per Macquarie, and volume growth will continue to moderate for Indian hospitals. Now, I would say in terms of seasonality also, this is not going to be a great quarter for Indian for the hospital business. It usually isn't. But I was keen to know, Vijay, how you are looking at it, because according to Macquarie, you will see earning estimates 9 to 22% below consensus. Max and Apollo getting hit. Do you think that there is merit in that view?
Well, the government had come heavily on the hospitals lately, and over the issue of overpricing. Now the patients generally feel, and I'm sure that each one of us, right now on the screen, we have all gone through the grind. Whenever you go to a hospital, they do a lot of overbilling, and we just cannot justify a simple rubber glove which costs them maybe 2-3 rupees. They charge 50 rupees for it, and the insurance companies pay the brunt, bear the brunt, and the the poor patient and the relatives they bear the brunt. So I think that there should be some rationalization which the government is already trying. So let me tell you one news which I read yesterday. One of the member of parliaments, Pappu Yadav, in Bihar, he has fixed up the prices for the OPD, for the CT scan, for the X-ray and whatnot. So, probably, we might see some kind of an action happening on these hospitals, especially these corporate hospitals where they do a lot of overbilling. So it is in the cognizance of the insurance companies, one, secondly, the government as well. So I think, these stocks might correct a bit, but I don't see a lot of merit because, the sheer population size of our country and the sheer, the requirement of medical facilities, which does not actually exist. Look at the public sector infra which we have for primary, secondary and tertiary, medical
Vijay, to cut a long story short, do you think that private hospital stocks have a further up move because the business will have an up move? We are heavily dependent on private medical facilities as a nation.
In the long term, yes.
Right.
In the short term, there might be some blip.
Okay. That was short and simple. All right. Let me get to an NDTV Profit exclusive. Banks have hit pause on fresh project finance and sought clarity on RBI's draft rules. What's the problem? Vishwanath Nair joins in for more on that exclusive story. Yes, Vishy.
Tamanna, so what the bankers seem to be suggesting is that the draft regulations that the RBI had proposed back in May are too prescriptive and too tough to really follow. So what the lenders are seeking are a bunch of clarifications from the regulator, one of which is that do public sector projects and private sector projects need to be sort of dealt with at the same level, and whether this 5% standard asset provisioning that the regulations are sort of proposing at the stage, should they be followed as they are said in the draft regulation. So what the bankers want is probably a revision or a review of that 5% number and bring it a little lower. Remember that the current standard asset provisioning for a project loan is 0.4%. So that 0.4% goes up straight to 5%, and that's a problem for the banks. What the banks have decided now is that if the borrowing entity is an SPV or a joint venture, which is going to be actually constructing that project, they are not interested in lending for that. On the other hand, if there is a well-rated promoter, a large sort of conglomerate that is going to be backing that loan with its own balance sheet, then that's when the lenders will consider or at least review that proposal. But as things stand, pretty much a pause on project financing by the banks.
That's something. And we spoke about this in the morning as well. Let's wait and watch for how long this lasts. But Vishy was pretty clear in that as well. And the story on our website as well for anybody who wants to go and read more about this. Thanks for that, Vishy. You've spoken about banks quite a bit. I wonder if any of the capex plays come into play as well as a result of this, and we will of course talk about all of this in more in detail as well, or fundamentally maybe tomorrow. But right now, just 9 minutes left or 8 minutes left for the markets to close. So let's try and focus a bit more on the trade. We've discussed banks quite a bit. What about top closing strategies? I think that's the other important piece as well to figure out. Ruchit, your top closing strategy for the day?
Niraj, I'll go with Reliance Industries. So primarily a couple of reasons. First is, we can see that the stock has surpassed its previous swing high of 3,030. Secondly, if you look at the derivative segment, then there's a lot of call writing positions was there at 3,000 call option. But some of these writers have unwound their positions. We can see unwinding of about 15 lakh contracts. But in spite of that, still more 35 lakh contracts are there open. So this indicates that the call writers have been trapped. And this could lead to further unwinding or short covering of positions. So I think in tomorrow's trading session as well, at least in the first half, we should see a good momentum in the Reliance Industries, probably towards 3100, 3120 could be seen. And so at current levels also, one can go along on Reliance from a BTSC perspective with stop loss below 2970 and expect targets of 3120.
Okay. RIL still in focus as we are already seeing quite a sharp move, 4.5% up on RIL. Quick look at the Nifty contributors as well, where RIL is dominating undoubtedly, even as the top index sees new highs coming in. So let's pull up the Nifty contributors and see what's happening there. The fact that we are so comfortably above 23,800. I don't know. Ruchit, how far is 24,000 in your view? before the week's close, possibly?
Quite possible. Tomorrow is the Nifty's expiry, so quite possible if we see further unwinding of positions, then we could see that 24,000 getting hit even tomorrow itself.
Vijay, any specific stocks that you have in mind? I know you won't do a BTST call, but as we're going into uncharted territory, what are the kind of pockets that you're looking at?
Well, I think that there are a few stocks on my radar. One is Nestle. It's a large cap FMCG company. It hasn't moved much. And I think that, whenever we see, this kind of euphoria, money generally travels to, stocks like Nestle and ITC. ITC is another stock which I think can be bought at these levels because it hasn't moved much. Another good stock I like is MSTC. It's a Government of India company. Presently trading at around 890 odd. I think that it can go up to 950. And MSTC is a great company. It's into the trading of metals and other stuff from the Government of India. An IT stock, Happiest Mind, which we saw a block deal yesterday. The promoter sold some of its stake, but I think the stock has the potential. The balance sheet is good. The numbers are good. The growth is fairly comfortable. I think that Happiest Mind post the correction yesterday can be bought into. And my final call would be on BEML land assets. So it's a demerged entity from BEML. So there's a lot of land assets which BEML used to have, and there's a lot of value unlocking which is going to happen in these companies. So we have seen, Shipping Corporation land assets. We have seen Hemisphere Properties. And similarly, it's a demerged entity of BEML land assets. I think that this stock has a potential to go up to 350, 360.
Speaking about Happiest Minds, we spoke earlier in the day with MD and CFO of the company, Venkatraman Narayanan, who talked about why the promoter wants to offload his stake.
When we talked about Vision 2031, we said that there is a vision statement of building a company to be there in perpetuity. For that, you need a stable promoter holding. And that percentage that we had visualized, Ashok had visualized, was about 40%. And we had also said that he has, during his time, he wants to make sure that a large part of his wealth goes towards building of a legacy in a not-for-profit organization called SCAM. And he's also trying to set up something in the healthcare field called Happiest Health. So these two are his personal.
Well, that's Happiest Minds for you. But take a moment, of course, to thank both our experts for joining in today and giving us your thoughts, Ruchit, as well as, really thanks for joining in today, Vijay Chopra and Ruchit, with your thoughts and your recommendations, more importantly. Before we wrap up the show, a quick word from my colleague Rucha on the telecom sector, because a second 5G spectrum auction ended earlier today, lasting just over a day. Bids worth 11,340 crores were received. Rucha Johnson with these details. Rucha.
Thanks, Niraj. So apart from the details which you already gave, I have few more things to add over here. Number one is there were no fresh bids in the morning today, and Bharti Airtel emerged as the biggest bidder in the auction. Now, if we look at the 2022 auction, it was a 7-day period, and it sold over a record of 1.5 lakh crore of the 5G telecom spectrum, and Reliance Jio was the top bidder. Now, one thing to note here is that the 5G spectrum is costlier to build, and hence most of the telecom companies have converted their existing 4G spectrum to provide the 5G service. So this is what we have, and many brokerages are also expecting a tariff hike in September, and that will also affect the telecom companies positively, of course. So this is what we have on the telecom, and we'll await for the tariff hikes, upcoming tariff hikes, and the telecom companies' actions over there, over the hike.
Okay, we'll certainly watch out. Thanks for that, Rucha. Let's see. A hike, is that the key word? Which is why Reliance, Bharti, Vodafone and Indus Tower, all of them are a buzz. Quite interesting, really. Okay, let's close the markets. About a minute and a half left. But good showing for the Nifty and the Nifty Bank. Not as much for the mid caps and the small caps, something that we're used to now for the last 2 days. Get the heat map up on the screen. This is mid caps, of course, in the red. But get the heat map up on the screen very quickly for the large cap look. Steady as she goes, no big changes. But here, It's Telecom which is doing well. The Aditya Birla duo has done well. Actually, Trio because Vodafone Idea 2 is in the green. And Sun Pharma and Britannia are doing okay. ICICI Bank 2 contributing. Adani Ports is in the green, interestingly. And the hospital stocks and autos in the red along with metals. Tamanna.
The upgrade for Adani Ports, Jeffrey's positive call for ICICI Bank working out, and of course it's all about Telecom. Just let's pull up how Vodafone and Indus is looking like it's closing, because that's where the story is. 5% up on Vodafone today. Indus Towers also about 4% up.
Despite being in the ban.
Despite being in the ban. Let's pull up the advanced decline ratios as well and just show you how the broader markets have responded through the day and what the trend has been. And it's not been so great. So another day of looking at the new highs and maybe seeing that headline and feeling happy, but then looking at your portfolio and then wondering what happened there, because your declines are still over the advances today as well. Let's pull up the sectoral indices and see what's actually worked and not worked. All right. So since we've pulled this up, let's come here first. See, Infosystems promoter stake sale has not gone down too well. You're seeing one or the other real estate stock in this list every day. NMDC also on the basis of that note has not done well. India Cements is on its own trajectory. Raymond, look at Raymond closing, Niraj, nearly 9% up ahead of that board meeting, a stock which has just been languishing otherwise. Before that call of Gautam Singhania being reinstated or not. Just a fantastic play over there. So these are some of the counters that have really been buzzing in trade and the big story. But just sectoral indices I wanted to pull up and see what's worked. Media is working because of Z. So Z is the other one that's had a big run up. They're going to raise about 200 crore rupees. And that's why you're seeing Z up. Metals, because of Hindalco, I would say largely not doing too well. Even Tata Steel was down, and Realty also in the doldrums, at least as far as today's trade is concerned. Will we see new highs tomorrow, 24,000 tomorrow, or by Friday? One reckons. We'll have to wait and see.
Yeah, maybe expiry day tomorrow, so maybe Friday. Let's see how it goes. But on that note, from Tamanna and me and the team that put this show together, thanks so much for watching.